Coming off the heels of 2020, we saw great investor demand for companies like Airbnb and DoorDash. Will 2021 be the same? Let's find out. Hey guys, this is Zito. On my channel, we talk about business and startups and companies that are changing the world today. I want to talk about the 2021 IPO market and specifically 3 financial technology companies or Fintech companies that are IPOing this year. On my channel, I don't ever do technical analysis. I just give you my opinions, a couple of research points, a couple of pros and cons of companies, and give you some price targets on them after I've discussed, kind of the market opportunity for each of these companies as well as pros and cons. The first company I want to talk about is Affirm, the online consumer lending company. They just IPO'd a few weeks ago, and their shares rose 100% in the first day, and they were able to raise $1.2 billion in their initial price offering. They've got a market cap of around 24 billion. I expect that to jump up in the next few weeks and months. They raised about 1.5 billion in venture capital, and it kind of makes sense once you understand who is leading the team. The company is led by Max Levchin of the PayPal Mafia fame. Max was the CTO of PayPal in the early 2000s, and once they sold to eBay, he jumped around to a few other companies, started a couple other companies, started a VC firm, and then he founded Affirm in 2012. I'll go through some of the reasons why Affirm will do very well in the market. Honestly, Affirm's value prop is very simple. When you shop online for products, you're gonna see Affirm at the checkout as an option to purchase a product. What you do is essentially you buy now and pay later. It's similar to a credit card, but this is an alternative to credit cards. You purchase the product in installments, and depending on the length of the loan that you're given, you have to pay interest on top of that. The interest is simple interest, not compound interest like a lot of credit cards are. It's a very simple idea, and it's taking off like crazy right now in the e-commerce space. There are tons of other services like Affirm. I can think of 2 right now off the top of my head, Afterpay and Klarna. They have a little bit of differences with them, but I think that Affirm is such a simple idea, they just executed it very well. I honestly think that the real advantage they have is the partnerships they've formed and the team who is running the company. One of their major customers is Peloton, and the news has talked about this a lot. As Peloton has grown, Affirm has grown as well because Peloton makes up about 30% of Affirm's revenues. When people buy the expensive Peloton bikes, they typically want to pay off the small loans within a year or 2, and Affirm is the consumer lending company that is underwriting these loans. They've got millions of customers and other partners like Warby Parker, Casper Mattress, among other millennial tech brands that people know and love. I think that they are really going after the people in their 20s and 30s who are not interested in credit cards anymore, but still need loan packages when they buy expensive products. I'm of the opinion that if you need a loan to buy a product, you probably can't afford it to begin with. But alas, people are using Affirm like crazy. It's kind of obvious that they're targeting millennials with their unwieldy spending habits. So we'll see what Affirm does in the next few years as they start building new products like loans for cars, loans for homes, things like that nature. We'll see how Affirm takes off. So my price target for this company is more akin to a fintech company like a Visa or something like a Square perhaps. My price target is about $160. There is a huge chance that it goes above $200 because I'm treating them as if they are a fintech company. The next company I want to talk about is Coinbase, the online cryptocurrency exchange. If you're into tech or finance, you've definitely heard of Coinbase. They emerged in 2012 as an easy way to buy and sell cryptocurrency, starting with Bitcoin, and now they've got tons of other cryptos on their exchange, like Ethereum and Bitcoin Cash. I think that Coinbase will do very well in their IPO. I could go and buy Bitcoin right now on their exchange super easily. They've made a beautiful website and beautiful app to make it as easy as possible to buy and sell crypto. They raised like $500 million since 2012, and it looks like as of the end of 2020, they have 35 million customers, which is a lot. People often wonder how companies like this make money. Well, they make money in a few ways. They obviously offer their cryptocurrency wallet where you can buy, sell, and store cryptocurrency. When you buy it with fiat currency, they actually take a percentage cut of each transaction. They've got different types of fees like purchase fees, trading fees, transaction fees, things like that when you pull your money out. They also have Coinbase Pro, which is more of like a subscription model where you can trade with other people on the platform whereas the normal Coinbase is basically buying and selling from Coinbase themselves. They've also got a VC firm that's making investments in other crypto companies like CoinList, among others. So those are just a few of the ways that they make money. I feel like with an IPO, they're obviously going to face a lot more scrutiny from the SEC, how they operate, and the SEC is going to look more into crypto if they do end up IPOing this year. The price volatility and market sentiment around crypto is super volatile. I think that's going to be a large factor when you look at this company and how well they're going to do in the market. You know, right now we're riding on a crypto high because Bitcoin has taken off in the last few months, but a year or two ago there was quite a slump with crypto, and only like the true crypto nerds were still talking about Bitcoin. Bitcoin has been around for about a decade, I think 11 years now. So it is about time for a company to go public related to cryptocurrency. I think Coinbase is the best company to do that. I think they're set up in the best way. You know, they are funded in Silicon Valley. They've got 35 million customers and they've got a strong team leading them. There are some downsides to this company, and I'll get into that. In terms of press, they faced a lot of backlash for a more political topic. I don't really talk about politics on my channel, but they did face a lot of backlash related to the Black Lives Matter events in June and how their internal team struggled with that. The purpose of the company is to democratize financial products, and people think that there's a social aspect to that, and their CEO didn't really want to make any political statements in the company. It persisted for months, and there was a lot of internal cultural strife related to this, and he eventually said, you either stay with the company or we'll pay you to leave, essentially. But I digress. I'm talking about the company itself and the technology, but I think that the internal cultural strife happening within the company could affect how the stock is priced and what investors think of it. You know, if they're losing all their employees, you might want to take a second guess at what's actually going on in the company. So when they do IPO, if they do IPO, they're going to face a lot more scrutiny around their practices, and we'll see what this company does in the future. My price target for Coinbase is $80 if it does go public. So I did want to talk about one company that potentially could IPO this year, Robinhood. Everyone knows Robinhood, the online brokerage for micro investors. So thanks for coming to my TED Talk. I'm just playing. I think that these fintech companies are pretty interesting. You know, they're democratizing the way that we build wealth in the world, as well as, you know, the types of opportunities we can pursue. I think the millennial generation is moving away from credit and debt, and, you know, we've faced a few financial crises in our time, like the 2008 financial crash, as well as most recently the 2020 coronavirus crash. You know, we're bogged down by student debt. House prices have risen, not relative to wages. You know, wages have not risen very much in the past 20, 30 years. And I think that these companies are trying to democratize access to wealth and financial products and have people live better lives. So I think it's just an interesting topic. If you find it to be interesting at all, please comment below on any other companies you think I should look into, and we can keep learning together. So yeah, take it easy. Peace.